Southern California, late 1980s. In the branch offices of Lincoln Savings and Loan, elderly customers are steered toward a product that sounds as safe as the thrift's own name. Bonds of American Continental, the parent company controlled by Charles H. Keating Jr. Many think they are buying something as protected as a federally insured deposit. They are not. When Lincoln is seized in 1989, about 23,000 bondholders are left holding paper that is effectively worthless. Their losses run into the hundreds of millions. The bill to the federal government for cleaning up Lincoln climbs above $3 billion. And 5 United States senators, the Keating Five, become permanent footnotes in the story of how political access delayed the reckoning. Tonight, the face of the savings and loan collapse. A thrift turned into a private piggy bank, retirees treated as funding, and senators who took meetings and money while the clock was still ticking. Charles Keating begins public life as a crusading lawyer against pornography, then becomes a Phoenix real estate developer through American Continental Corporation. In 1984, he acquires Lincoln Savings and Loan of Irvine, California. The thrift industry has been deregulated into a playground. Deposit insurance still backstops the public, while investment rules loosen enough for ambitious men to swing for the fences with other people's insured cash. Keating swings. Lincoln's assets balloon as money is steered into high-risk real estate and speculative paper. The opposite of the sleepy home mortgage machine retirees imagine when they see the word savings. On paper, growth looks like genius. In substance, Lincoln becomes a funding arm for Keating's empire, including monuments of excess that will later look like altars to other people's deposits. Federal regulators smell the risk. The Federal Home Loan Bank Board pushes toward action. Keating pushes back, with lawyers, with influence, and with roughly $1 million in political contributions that flow to 5 senators: Alan Cranston, Dennis DeConcini, John Glenn, John McCain, and Donald Regal. In 1987, those senators meet with regulators on Lincoln's behalf. The investigation loses precious time. Whether each senator is a villain or a cautionary tale of poor judgment becomes a years-long ethics fight. Cranston takes the hardest hit. Others are criticized in varying degrees. Paper empire does not need a unanimous moral verdict on every office holder. The structural fact is enough. Political access became part of the fraud's runtime. Delay is not a side effect. Delay is oxygen. Meanwhile, inside the branches, the bond sales continue. Elderly customers, many from retirement communities, are sold American Continental debt in an environment that screams thrift safety. When the parent goes bankrupt and Lincoln is seized in April 1989, those customers discover the difference between a deposit and a promise. Lincoln's failure becomes a symbol of the wider S&L crisis, a national wound that costs taxpayers vastly more than any single villain. Keating is tried in state and federal court, convicted on fraud and racketeering theories, imprisoned, then sees convictions overturned on procedural grounds in the mid-90s, and finally pleads to a narrower set of fraud counts in 1999, sentenced to time served. He dies in 2014. The retirees do not get a tidy Hollywood ending. Some recover scraps. Many do not recover the years. The Keating story is what happens when deposit insurance, deregulation, political pressure, and a salesman of confidence meet in one lobby. If you have watched this series from the beginning, you can already name the ingredients without me. A source of trust that outruns scrutiny. A story too good to interrogate. A victim standing at a side door. A clock hidden or denied. Season 2 keeps changing the costume. Computers, mutual funds, leases, tax shelters, carpet vans, thrifts, junk bonds, banks that answer to no single country. The wardrobe updates. The body underneath does not. That continuity is the whole point of telling these stories in order instead of as disconnected trivia for the algorithm. Isolated, each scandal looks like a freak accident, a bad apple, a unique loophole, a once-in-a-century machine. In a row, you see the factory. Equity Funding's ghosts rhyme with OPM's leases. Kornfeld's Salesforce rhymes with Homestake's celebrity billboards. Minkow's guided tour rhymes with DeAngelis's pipes. Different decades. Same choreography. Once you can see the choreography, you can see the next performance forming while the crowd is still applauding. And the stakes are never only the famous names. For every chairman on a victim list, there are clerks, pensioners, dentists, teachers, and quiet professionals whose losses do not make the montage. Paper empire exists to put those quieter wrecks on the same ledger as the headline fortunes. Because belief, when it breaks, does not check your net worth first. And the side door is usually built for the people the front door ignored. There is always a clock. Sometimes it is a maturity date on a coupon. Sometimes it is an auditor's appointment on a Tuesday. Sometimes it is a newspaper deadline or a regulator's meeting that a senator asks to postpone. The schemer's job is to make you ignore the ticking, to wrap the countdown in patriotism or piety or sophistication. Your job after this series is to hear the ticking anyway, and to walk out while there is still a door. If you have watched this series from the beginning, you can already name the ingredients without me. A source of trust that outruns scrutiny. A story too good to interrogate. A victim standing at a side door. A clock hidden or denied. Season 2 keeps changing the costume. Computers, mutual funds, leases, tax shelters, carpet vans, thrifts, junk bonds, banks that answer to no single country. The wardrobe updates. The body underneath does not. That continuity is the whole point of telling these stories in order instead of as disconnected trivia for the algorithm. Isolated, each scandal looks like a freak accident, a bad apple, a unique loophole, a once-in-a-century machine. In a row, you see the factory. Equity funding's ghosts rhyme with OPM's leases. Kornfeld's Salesforce rhymes with Homesteak's celebrity billboards. Minkow's guided tour rhymes with DeAngelis's pipes. Different decades. Same choreography. Once you can see the choreography, you can see the next performance forming while the crowd is still applauding. The playbook. What Keating adds to the manual. Rule 1, if the building says savings, customers will hear safe, even when you are selling them something else. Rule 2, political access is a form of reinsurance. It does not make the assets real. It makes the clock slower. Rule 3, the most expensive frauds are the ones that socialize losses through a government guarantee while privatizing the upside. The paper empire ledger adds Lincoln, billions in taxpayer cleanup, hundreds of millions in bondholder pain, and keeps the 23,000 on the wall beside Ponzi's immigrants and Howe's women. Because money was never paper. It's belief wearing paper's clothes. And sometimes belief wears a banker's lobby and a senator's appointment book. Next time, the king